And I will welcome everyone today to our meeting. This is our December chapter meeting and our last one for 2020 for CBSHRM. I'm Erin Brooks and I'm on the board, as well as Naomi and Renette. We're all three on the board for CBSHRM. And we just want to welcome everybody. I know we probably have some more participants, so I will just kind of keep track of those that are coming in. So with that said, I will turn it over to Renette, and then at the end of Burke's presentation, I'll come back to me and I will give you the certification credit information that we'll need. We're also recording this session as well, so we will make sure that you get this presentation as well as Burke's presentation after today's session. So thank you for being here and happy holidays, everyone.
So thank you for joining us today, Burke and Jennifer. And Burke is a director of sales for Western US at Rapid, Paycard and Green Dot. Burke brings over 25 years of sales management, operational oversight, and entrepreneurial experience. In his early career, Burke worked in a banking and public accounting with Bank of America, US Bank, and Grant Thornton, LLP. Over the last 12 years, he has focused on the unbanked and undeserved population of the US, serving as an executive vice president of a national payroll card company and chief operating officer of a startup organization designed to serve the cash economy. Burke is a fourth generation Oregonian, so not far, resides in Portland. He was a Division I collegiate athlete and captained the golf team at Santa Clara University while earning his degree in economics. So you made your way to California, I see. Outside of his daily duties, Burke is actively involved in a number of charities, professional organizations in his community. And today he is here to talk to us about, would you give your boss a loan? So I'm going to roll it over to you, Burke, and thank you again for being here with us.
Thanks everyone for having us. I'll let my colleague Jennifer say hello as well.
Hello. Thanks for having us today. We appreciate the chance to meet you all and support your SHRM chapter with an accredited topic today. I've been with Rapid Paycard for 7 years, and in the past, prior to that, about 20 years in the payroll industry. So in addition to that, I was a collegiate athlete at Santa Clara University as well, not on the golf team, but fun to have an alum that I work with on a regular basis. So again, let's have Burke take it over and I'll chime in as needed.
Jen is much younger than me, so that's why I'm wearing the cheaters and she's not. But we both, Jen grew up in California. I grew up in Portland and was in California for college and a couple of years after working for Bank of America. But I've lived back in Portland now for the past 25 years. I'm actually speaking to you today from Gearhart, rainy Gearhart, Oregon. So
it's a beautiful background, I have to say.
Yeah, it's thank you. It's a house we've had in our family for 45 years.
Oh, wow.
So I'm lucky to have the house here. I see your dog there, Renette. And I was turning around looking. My dog, who looks a lot like that dog, is usually right under my feet.
I was looking at Jennifer's dog and I was like, her dog looks a lot like my brown dog.
a lot of doodles over.
Little doodle, yep.
He must be on the other side of the couch. But anyway, we'll get to our presentation today. Thank you for having us. Because we have a relatively small group, I'd love if you guys would all just say hi and tell me what industry you're in, what business, what company you're with, because I can tailor this a little bit more to you. And also feel free at any time to jump in with comments or questions. It makes it a lot more fun if the group is participating than just listening to me talk the whole time. So if you wouldn't mind, Erin, if I'll start with you, I'll go across my reader here.
So I'm Erin Brooks. I have a super long title, so I'm not even going to say it. And it's not because I'm super cool. It's just I have a very long title. But I work for Lucas Engineering and Management Services. We are a subcontractor at the Hanford nuclear site. So we deal primarily with engineering and project management services and staff augmentation. But we also have a team that does organizational development, strategic development, leadership development, and learning and training. So I wear a HR hat for my company, as well as work closely with this training group as well. And we do have clients across the country now too, besides just the nuclear site.
Awesome. Thank you. And Renette?
I'm self-employed, and I do coaching and training. I was a HR strategic partner, as far like an HR consultant for many moons, and I have transitioned over to the coaching and training side of things, to do more leadership coaching and developing.
Awesome.
And I'm actually originally from California. I just moved to Washington a year ago. So I lived up in Chico, California, Jennifer, way up north.
Me as well, and Oregon.
Ah, you're a busy girl.
So is this your first winter in Washington, or is this your second dose?
Second. It's not bad so far this year.
Yeah, it hasn't been. It's been nice. I agree.
Yeah.
Well,
I don't dislike the snow. It's kind of fun.
nice. Well, welcome. Holly.
Well, good morning. I'm sort of new to this chapter, new to this group. I, in a variety of different capacities, led sales and marketing teams for the last 20 years. And in the last 6 months, started a whole new chapter in my career. And like Renette, I am now self-employed. I got my entity formation confirmation the other day, so I'm official and legit, and wanted to be a part of kind of ongoing education on the HR side because of that more small and medium-sized company that I was used to working within. I did so many HR functions, but they were never HR titles or called that. But at least you were kept alert of all of the changing laws and regulations. And so I needed a way of being self-employed now to keep up with all of that and to have good partners and dialogue and people to reach out to, resources, all of that good stuff. So excited to be here for my first round of education.
Excellent. And then Naomi.
Hi, I have a consulting practice. Been in this area probably 4 years. Work in leadership and organizational development, and am on our board for the SHRM chapter.
Awesome. Well, thank you so much for having us. I think I got everybody. If I didn't, just jump in. A lot of HR consulting. So I'll try to kind of tailor it that way. And maybe more frequently, I'll say things like, you might want to discuss this with your clients, or these are some things that your clients could benefit from. And if you've got clients or relative comments, please again, jump in. With that, I'm going to share, and I've got 2 screens, and so I keep my screen on one of them. So let's make sure I do that right. Okay. And now, give me 1 sec. Okay, so now you're seeing the PowerPoint. Good?
Yes.
Okay, and I want to just go real quick. Okay, so we're going to get to our title here in a minute, but we're going to start with, so our topic today and the takeaway that I hope you'll have today, and Jen, keep me honest on time, is sort of where we in the payments industry, and that's where we are with Rapid, Paycard, Green Dot. We're owned by a public company called Green Dot Corporation. Historically, last 20 years, I've been in, as my too long bio said, entrepreneurial world and sort of the payments space. And the takeaway I hope you'll have today is sort of where we see things going, where we've been in the payments, and then where we see things going with payments as it pertains to HR and employees, employee retention, employee attraction, and also how it pertains to the generations as the generations start to change and people my age have now become the minority. I was born in 67, so end of boomers and sort of the starting of X, and depends on what you read. We now, even if you put me in X, we are now the minority of the workforce, and the majority are now the millennials and the Gen Z. And we as their employers and HR departments have to start to adjust our management styles, our hiring styles to understand those generations better. And there's some really cool creative benefits, some we've had for a long time and some that we have that are new, that we can start to offer as employers, or as your employer clients can start to offer, that'll really help to attract and retain these new generations that are now the majority of our workforce. So we start with a poll question, and I didn't pre-populate these, I apologize. So if we're recording, I hope that'll still work for your RCI credits. Is that good? Okay, so if you just want to chat your answer or jump in. Essentially, number one, does your company offer pay cards as an option to participate in direct deposit? With some of you on the consulting side, are pay cards something you discuss with your clients as a cost saving measure? Historically, that's where they've been, but now really as a disaster preparedness measure or a way to get funds to your employees, to their employees very quickly. Pay cards have taken on a whole new world in terms of the benefits they offer and the service they can provide to your clients. So if you just want to jump in the chat there and let me know, that would be great. Jen, can you monitor that for me?
Yeah, definitely. So we've got most of it. No, Renette has some. So I would say the talking around pay card as a resource and a way to support the workforce would be good for all of you to know about as you talk with your clients.
Good. And I've actually got a couple slides that I just inserted in here to talk about that. So we'll move on to our agenda and the things we hope to cover. And some of these things are relevant today. Some are technologies and payment trends that we see coming that we hope you'll take away and share with your clients of sort of where we see things going so they're prepared for when these new technologies are available. Some are available today, but also when they start to hear demand from their employees, they can be prepared to go, oh yeah, I know about that. Here's where we are as a management team in terms of planning for that. And here's where we'll see it being implemented in our company. So why on-demand pay today? Life doesn't wait for payday, a solution for retention and engagement, and some key considerations. So I kind of hit on those topics now. Those are our 4 bullets, and we're going to go through those in the presentation today. So we'll start with the topic that we all have to talk about all the time, which is COVID. And where were we a few months ago? And we put this deck together. I've updated it several times over the last 9 months of captivity. It first said just a few weeks ago. And the last time I got to give this presentation in person, which is a big part of my job, was traveling around and giving this presentation in our territory. Jennifer and I cover basically west of the Mississippi River. I do, Jen's in the Northwest. So I would be on the road every week. And it was probably my favorite part of the job was getting to come, join your meetings, give the presentation, interact with the people, see the heads nodding yes or no, or arms crossing. And so it's just a couple weeks ago. My last time, unfortunately, was in March 13th. I was in Denver. And for a little while, we had this as just a few weeks ago. And unfortunately, now as we all know, I've had to change it to just a few months ago. Looks like there's some light at the end of the tunnel, but we were hugging it out. And so we were used to a different way of life. Believe it or not, that was still in this year. Seems like years ago to me. And how things have changed since then, we all know. And I hope have all gotten through it okay from a family and friends and coworkers perspective. But that's where we are. Let's talk about now some of where we are today. That's where we were. Also, one of the things I want to talk about today is sort of the mentality of our coworkers and our employees. And nobody knows that better than those of you in HR and participating in SHRM. But I'm going to give you some statistics that'll talk more to the mentality of our coworkers. And so some of it's a little bit frightening. So here's some statistics that cause me a lot of worry. 78% of US workers live paycheck to paycheck. Nearly 3 in 4 workers say they're in debt today. And over half those workers think they're going to be in debt for forever. That's a pretty big load to wake up to every day. More than half of minimum wage workers say they must work more than one job to make ends meet. So these statistics, again, are speaking to the mentality of our coworkers and our employees, even before they go to work, which is a stressful situation. And I sort of personalized this story to myself when I was young. I was working for the banks. I worked for B of A and US Bank, as we mentioned. I always had a fancy title and I always had a good job. And I was participating in my 401k and all those things. But I was young. I was spending all the money I made. And I had bills that I can remember. I'd wait and I'd go, okay, this bill I'm going to pay on the next payday. I never asked what payday it was when I got hired. I just said, great, I'm going to get paid. And as I continued through my 20s and 30s, you get married, you start having kids, you start buying houses, you start buying cars and keeping up with the neighbors. That stress was on me for many years. And thankfully, I guess now I'm older and I've gotten that off of me, but it's not just the minimum wage workers or hourly workers. Again, this is our entire workforce living paycheck to paycheck, 3/4 of our workforce in debt. That's a stressful situation before you go to work, which is even more stressful. So I think we want to bear that in mind as we're talking to our employees and understanding where they are in their personal lives and how that's impacting their work. So who's running out of money? This one's speaking to that last slide and is interesting and even to my story. As I progressed in my pay scale, I guess, through life, all of these people, even the high earners, over 200,000, a third of them are running out of money in between paychecks. So it's not just, although they're the majority, are hourly labor and the lower paid employees. Look at the numbers all the way across, all the way up to 2,000. Pretty interesting and again, kind of more scary to me. I think from your perspectives, when you're talking to clients, if you're talking to clients with really workers in any of these segments, they're stressed out financially and they're coming to work with stress before they even get to the stressful environment of work. So it's really, this is a good talking point as you're talking to clients about some of their HR initiatives and things that they're going to implement in the future. They might not be aware of this. People, as Jen mentioned, I've been selling pay cards now for 12, 13 years. And my big challenge back when we started, back in the early 2000s, a new product, is I'd get to HR, I'd get to the C-level of companies, and the person I'd be discussing it with would be thinking in their own mind. And they'd be thinking, well, I just get direct deposit and then I go pay my bills. And it was always a challenge to get them to think, okay, but think of the person you're giving a paper paycheck and what they're doing with that. They're going to a check cashing store. They're waiting in line to pay bills with cash. They don't have the financial education and technology that you're familiar with. This slide, though, is telling us that it's not just those people that are financially stressed, it's across all income levels. And so we as employers, we working with employers have to be able to help them understand that message and then help them understand some of the potential benefits that are available to help those employees deal with that stress. Because there's cool things now that truly are a benefit. 1 in 3, we talked about who it is. So that's a scary statistic. So the unemployment rate, and I'll go back to my story about being in Denver in March. Back then, we were at historic low unemployment. We were at historic low in Oregon. We were at historic low nationally, below 3% in some cases. And a lot of this discussion we had was, gosh, we're fighting for employees, particularly with our clients that were in the hourly blue collar arena. They were struggling to find and retain employees because there was so much jobs out there and the labor market was so tight that the employees could just move for any reason because they knew that there was a job right down the street for them for maybe it's $11.50 an hour versus $11, and maybe you just made them mad. Maybe they just didn't feel like showing up. But it was an extremely tight labor market. And as mentioned, I studied economics when I was in school long ago. But there's an economic theory that once you get to 3% or lower unemployment, you're essentially at zero. And the reason for that is that those 3% don't necessarily even want to work, and they're just gaming the system. So we were in a very tight labor market earlier this year, believe it or not, and we were tailoring this conversation much more towards, well, how can I use some new benefits that aren't necessarily pay raises? Because I've been a small business owner, small, medium business owner, the answer can't always be, I'm just going to pay people more money, because pretty soon you're out of business, even in large companies. So what are some other creative things I can offer to my employees, prospective employees, existing employees, to keep them engaged? And then also bear in mind that Burke, the Gen Xer guy, isn't necessarily who I'm going to be hiring, the guy who didn't ask what payday was. It's these younger generations who have a whole different mentality on pay and how they're paid. And we'll talk more about that. So we were at historic lows, believe it or not, in March of this year. And then there's our favorite guy that I think we're all tired of seeing that little shape. I know I am, so I'm going to skip by it. But then what happened? We went into COVID. 45 million. Now, these numbers are a little bit dated. You can't really keep up with them. They change every day. But July 2020, we were up in the 20% unemployment. We're back down now, 8-9%. And I think we're continuing to see improvement as we continue to see this vaccine process. We'll I hope, continue to see. I know you in Washington and we in Oregon, starting on Thursday or Friday morning, they're putting us back in full lockdown for the remainder of the year. That has a huge, terrible effect on our small business clients. And for us in pay cards and in our world in Rapid and Green Dot, we employ those workers. And we have some slides to talk about, but a lot of our cardholders are restaurant workers, hospitality workers, blue collar workers, construction. That's the people we serve. Staffing are huge verticals for us, and they keep taking away their income. So we're seeing some fluctuations in unemployment. You can see the unemployment filings and numbers. What worries me about this is just the death of businesses as a result. Small to medium businesses that people have spent their whole life building that are going to go away and not come back. And it's frightening. So I hope we get through that quick. But we essentially now are talking, as we're looking at different unemployment numbers than we were earlier in the year. We want to look at benefits that we can offer to help attract employees, but also make them want to stay engaged as we are able to offer more jobs. So any questions, anybody jump in if they'd like to. Assess the impact of COVID. 1 in 3 jobs in the US are vulnerable, excuse me. That's a big percentage. 80% are held by low-income workers. So the majority of our jobs, again, small business, not necessarily hundreds of thousands of dollars in pay, and 1 in 3 of those jobs is vulnerable. That's a scary statistic as we go back in the West Coast, particularly this sort of full shutdown. Not good for our business clients, and we've seen that here at Rapid. We saw, particularly in March, April, we saw a big drop for the first time in our 17-year history, a big drop in card loads because people were going on unemployment. We saw some bounce because of the economic stimulus, but it's taken us really till now to get back to where we were. And what we've seen is we've had a record year. Jen can speak to this too, a record year in terms of new clients we've signed up. New clients, particularly driven by HR. Clients saying, oh my gosh, we can't give out paper paychecks anymore, no matter what our state law says. I can't have our payroll people going into the office and cutting checks and touching them and then putting them in the mail and more touching and then get them to an employee with more touching. I can't do that anymore. I've got to find an electronic solution. If I'm in a business that has under or unbanked employees, they don't necessarily have an electronic solution. And that's where a pay cards become a really important part of our overall HR offering and our disaster preparedness. So we're going to jump now to another poll question. Did your company lay off and or furlough people with benefits or a combination? And for you that are consultants, I know you're going to have probably a large array of, yes, some did that, some did this, some didn't do anything at all, some stayed staffed. So I'll kind of skip over that one. You can jump in in the chat or jump in live if you'd like to. But I'm guessing you have clients that did all of the above is going to be a popular answer for that one. And just give me a head nod if I'm correct there. So let's skip there or move on. Jen, any feedback I should know of in the chat?
Well, it's just right in line with what you're saying, but right before you showed the poll question, I just noted in chat that in the record amount of clients, that what's interesting is there were much fewer employees in the clientele that we were bringing on board because they're just really, again, with furlough and other things happening, trying to find out ways to support contactless pay and all that involved.
Yeah, I meant to say that, Jen. Even Jen and I, our Western team, we've signed probably 20% more clients this year, and we are down like 60% of one of our main metrics is how many paper checks are being issued by those companies. And it's not because we signed a bunch of smaller companies, it's because their employee count was lower because of COVID. So it's been a really interesting impact on us. And in the long run, it'll be very positive because our whole business is built around electronic pay and getting employees on electronic pay, regardless of their banking situation. So right to that point, what are companies looking for now? We're looking to eliminate paper checks. Historically, and again, when I started in my debit card company years ago, I always kind of got pushed out of HR into payroll. because HR didn't see pay cards as a benefit. And now I think we've really proven that it is, particularly with things like disaster preparedness. You know, in the old days when I was in the Midwest, I'd talk about hurricanes. Here, I'd talk about tsunamis or snow, depending where I was sitting. Fires. We've had all kinds of stuff this year. So how do we get, and how do your clients get all of their employees, regardless of their banking situation, onto direct deposit? How do we eliminate paper checks, drive 100% electronic payroll, enable a backup plan for emergencies and in-person check disbursements? I touched on that. Deliver solutions for cash-strapped employees like on-demand pay. And we're going to dive into that here in a couple of slides. Unlock tools for employees to pay bills and shop online. All the positive things that a pay card, a Visa or MasterCard pay card, gives an under or unbanked employee. And then in the old days, what we used to talk about when we touched on this, it was kind of how do I, if I'm in Oregon, and I know, are you all of you in Washington now? So you're fortunate. In Washington, you're in a mandate state, but I heard a couple of Californians, which I came from California. Maybe you have employees in California. Maybe you have clients who have employees in California. And that's always one of my favorite questions, particularly when I'm sort of in my Midwest states or anywhere Nevada East. I'll ask for a raise of hands and I'll say, okay, who has people in California? And immediately the people with employees in California, their hand goes up and their head goes down, because they're dealing with all the laws related to California, which are only going to get worse as they implement their own little California CFPB, which who knows what craziness that organization will come up with. But we in HR and payroll need to be able to deal with it and get people on direct deposit. And in the old days when I was calling on clients, they'd say, well, what can I do? I'm in California, I'm in Oregon. I can't mandate direct deposit. I can't make direct deposit a condition of employment. And I'd say, okay, well, here's what you can do. On Friday afternoon, you can take that paper check, you can go put it in the mailbox at the U.S. Postal Service at 4:59 p.m., and it's now deemed delivered. And then you can tell that employee that's not willing to get on direct deposit, hey, it's in the mail, and just watch that mailbox. And that's true, but it's not very positive. It's kind of the stick. With employees that we value, you don't necessarily want to beat them with the stick. You want to come up with something positive. And how do I incent you in a positive way to get a direct deposit? How do I offer you a good benefit to help you make that move? And that's what some of the things are that we're going to talk about today. Things like on demand, things like, or early wage access is what Visa's titling it. I've got some slides on it. Things like that, but also things like, hey, Mr. Employee, if we face another disaster, whether it's a fire, whether it's a tornado, whether it's another COVID-21 or whatever else comes down the road, we as your employers, your clients, we want to get you funds immediately. And I can't do that in a situation where my payroll is now remote. I don't want them going into the office to be around each other or to be touching things that other people are going to touch. All these litany of reasons that we have now. Here's an easy solution for you that are consultants who are looking to build value with your clients. I'd go in there and I'd say, well, you're still cutting checks. I can save you money immediately. I can save my fee to you right off the bat by getting rid of those paper checks. Here's how you can do it. It's easy and it doesn't cost anything. It's free. And we can walk you through if you have questions. Why is it free? But it is. So that's a great way to get yourself starting to show value. For me, as if I'm a consultant, which I have been, how do I show value right away? I save the employee money. I save them more than they're spending on me. So I'm paying for myself and adding incremental value. Paycard is the simplest way to do it. And I can attest that because I've been selling it for 12 years. And if I'm smart enough to sell it, trust me, it's simple and it's easy to implement. So we can help you with that. I'm not going to go into Paycard training 101, but reach out to Jen if you want to learn more about that, because from a consultancy standpoint, that's a huge arrow in your quiver. So here's what our client prospects are looking for now. Jump in if you hear other things from your clients, but this is what we're hearing over and over again. These are what we need to be prepared for. We've had clients for years, and Jen can tell you some sales war stories if you want, about clients that just sit on the fence. I'm not sure. I don't know. We got these other initiatives. I'm putting in this other system. All legitimate reasons. And then COVID came, and suddenly they had to disperse funds immediately to their clients. And guess who they needed right away? Us. And we're doing the best we can to serve all these surge of clients, more clients, less overall numbers, because it became a much higher priority. So you now, particularly in the consulting world, can help prepare. Let's be prepared for the next time this happens. This was unthinkable, but I guess now we got to open our minds to the unthinkable and eliminate the things we can from a payroll and HR perspective. So what are the best ways to pay an emergency? Pay cards. We just talked about it. I just gave you a little story there, so I'm not going to beat that one again, but pay cards, the only thing I'll add there is no cost. They're free. So you can get in there with an employee providing this benefit at no cost to them, at no cost to their employee. Free benefit. Or early wage accrual. So this has been called, this is a new product and a new technology that you're going to hear more about. And that's what I want you to go away today, is not being caught off guard when your client says, well, what about this on-demand pay? And Visa now has come out, and Visa sort of the guidepost of these things, and they deemed that we're going to call it early wage accrual, EWA, if you see that acronym. What about early wage accrual? I've got employees that they're in between their pay cycle and they have an emergency and they want to have access to a portion of their accrued wages. Your employees are going to hear more and more of that. If I had people in the QSR space, which is quick service restaurants, maybe you do, they've already been approached. Staffing probably already been approached. And there's all kinds of regulation coming out now around this. And I've got some slides to talk about it. But those are two things that you're going to hear hopefully more about. And again, from a consultancy standpoint, put those in your quiver of things that you can immediately help your clients become more prepared to address, because it's going to become much more commonplace. So I got a little slide here. Come on, Paycard. Now I've hit a lot of these things, but I do want to touch on Paycard, because it really is now a key and easy way to help your clients be prepared for disaster. It's a true employee benefit. It's not something that, like 12 years ago, you'd send me down the hall to the payroll department from the HR department. This is something that HR needs to incorporate as part of their planning. So it enables cashless purchase and online shopping. It's a Visa debit card or a MasterCard debit card. You can have either one. It reduces or eliminates fees, trips and costs, check cashing. The people that are historically using our card. We're getting a lot more card adoption now amongst the millennials and the Gen Z, because they're shunning banks and protesting whatever it is they're protesting, and they just don't see the value in a brick and mortar bank. So they see a lot of value in a debit card. So not so much what we used to have, which was the unbanked population, of which there's still a significant percentage of America. Depends on what you read. Could be 15%, anywhere 15 to 20 is either under or unbanked in our US economy today. And that's been exacerbated, of course, by the whole COVID thing. But those people, again, are people that said, I'm in Oregon, I want a check. And I as an Oregon employer, or certainly I as a California employer, I got to give them a check, because the law doesn't allow me to say no, direct deposit is a condition of employment. And I'm going to go on one little rant here, that if I was to go on unemployment in Oregon or California, would they send me a check? Absolutely not. Total hypocrisy. The government isn't going to send you a check, but me as a business owner, they're going to dictate to me how I pay my employees. It's insanity, but it's the reality, and we have to prepare our clients and employers to be able to deal with that. So that unbanked employee, he's taken that check because you have to give it to him, and he's going to a check cashing store. He's paying a fee to negotiate that check and get his funds into money orders or cash. He's going and standing in line. He's riding public transportation to pay his, for example, prepaid cell phone bill, to pay his cable bill. Maybe he's paying his rent in cash. All of that can be eliminated at no cost to that employee or the employer with a pay card. And it's now we've got a Visa pay card that I can go online and buy things. I have the entire book of regulations, which was my first job, was knowing chargeback regulations, protecting me as a cardholder. Same rules and regs that protect me as a US bank cardholder, protect me as a rapid pay card holder, of which I have both. No overdraft fees. We've never had them at Rapid. I'll admit, in my old business I did. That's all been regulated away. So the fee schedules, the few people remaining standing in the pay card world, highly regulated. The fee schedules are very, very tight. So, which is good, great for our employees and our employers. No minimum balance, no monthly service charges. Unlike cash, a card can be replaced. That employee who cashed his check and loses his cash, you're out of luck, buddy, till next payday, or you're going to some other alternatives we'll talk about. So it's a huge benefit for the employee. The monthly service charge, even if they go open a bank, a lot of those employees that are on our lower end of pay scale are going to get a monthly fee because their direct deposit isn't high enough, their transaction volume isn't high enough, the amount they have on balance isn't high enough, they don't have a boat loan or a home loan for the bank's going to get them. And that is all thanks to the regulations we got back the last time we had a big downturn, which was 2009, 2010. So something like a pay card is actually more cost effective for that lower paid employee as well. So another cool thing you can share with your clients as you're differentiating yourself and helping them look for ways to save money, which they all need to do now, given the situation we are with the economy. Any questions, comments there? Good. Okay, so what are next generation payments? And Jen, I think probably since you've done this with me, this one looks familiar from a couple of years ago. I always like this slide. And so I put it back in. So what are next generation payments? Fintech that enables payments to any debit account along with tracking, reporting, and security. It works with current payroll cards or other disbursement vehicles. Easy to send daily files, no complicated integration is required. So that's what we look at when we're looking at in terms of next generation payments. And there's a cool banking tech term you can get in there, fintech. Jen, you don't get to answer, but who knows what fintech is? Bonus question.
Ooh,
Yeah.
I'm looking at the chat.
Okay.
No one's chatted yet.
Naomi had her hand up. What does fintech mean?
Well, it stands for financial technology, but it's the opposite of what banks have to offer. And anybody can get into that business, is my understanding.
It depends on what segment you're getting in, but you're exactly right. Fintech, financial technology. Nowadays, known under the term fintech, and you hear it all the time on the news. There's all kinds of different variations of fintech firms. Particularly the last couple of years, you've seen a higher rate of IPO. If you somehow can deem yourself a fintech, you get more money in your IPO. So there's all kinds of cool things there, and it is something you want to be aware of fintech. The story I tell here is this is a new term, probably the last 4 or 5 years, but the idea of fintech is not new. And I'll use back to my own story. I got hired out of college in 1990 by Bank of America. They put me in the merchant visa department. I didn't know what that was. All I knew was I needed to get paid to pay my rent. So they said, there you go over there in the merchant visa department. What that was, and it was the other side of the business I'm on now. Today, Jennifer and I are issuing prepaid cards to our employer client employees, and other people on the other side of our business, direct to consumer on our Green Dot side. The other side of that, where they put me, was the merchant acquiring side. So that's the merchants who are accepting debit and credit cards and processing them. And the story there was at the time, what was fintech in merchant acquiring world? We were making the transition from the old zip zapper. I'm not gonna guess at anybody's age, but back then in the 80s, you had the old manual embosser, and you'd go to buy something with your Visa card, which was originally a Bank of America card, and the merchant would take it and they'd go on a triplicate form, and they'd call on the phone and they'd get an authorization code. They'd write that down. They'd give you one copy of the triplicate code that was covered in ink, and away you'd go. That was the early to mid 80s. And then we started into the swiper machine where you'd swipe it and it would dial up on the phone, and in the little red numbers that look like the Police Ghost in the Machine album, it would give you the approval code. And if I was a really good salesman back then, I would sell you the printer machine that would print out a piece of paper that you couldn't write on, that was carbon, and it would be rolled up into a circle. So that back then was fintech. And then as time went along, that became accepted. Those became integrated into cash registers. In the early 2000s, we saw the onset of pay cards. My other question here, though, is when I started working in the 80s, I was in college, I worked construction, stuff like that. What was fintech in the 80s? The answer? Direct deposit. Maybe the late 70s, early 80s. It was direct deposit. and I can remember my dad running his business. That'll never work. I don't trust that. I'm giving my employees checks because I get that in my hand and I go see the teller at the bank, say hi to her once every 2 weeks. That thing will never work. Well, how many of us would ever go to work today at a job that didn't offer direct deposit? None. So my premise of this story is the things we're going to talk about next, early wage access, on-demand pay, will be the norm. They are the direct deposit of the late 2020s and 2030s. They will become the norm of payment. And the idea of our presentation is we as employers, we as consultants working with employers need to make them understand this is not a flash in the pan thing that's going to go away. Your employees are starting to expect this, and we need to be prepared to offer it to them, not only because of their demand, but because it's a great benefit for them. And I'll show you some other slides to that. How am I in time, Jen? 12:40?
You're
20
good. You got
minutes?
20 minutes.
20
Yeah.
minutes? Okay, good. We're about
19
halfway.
19 minutes.
19 minutes. Talk faster. Okay. Okay, so here's our guy from the office. Here's back to our title of our presentation. If your CEO asked you for a loan, how would you react? And when they sent this to me, I went back to marketing and I said, oh, you guys got a typo. It's supposed to say, what if I asked my CEO for a loan because I need money and I work for him? Nope, Burke, it's correct. And the reason, Burke, that you don't know that is because you're old. So that was an uplifting conversation. But really what this is saying is, again, to the mentality, and I don't think I'm giving you guys any news in HR, but the mentality of our now millennials and Gen Z employees. And I would say my own children, a 21-year-old and a 20-year-old, they're about to be 22, 21, they're both in college. Their mentality, I work today. That's my money. I want you to pay me today. And if you don't pay me today, boss, or dad, in my case, but use boss in my employee's case, if you're not paying me the money I earn today, I'm loaning you money. I'm loaning your company money. And that is the way they think. And there's a lot of things that are contributing to that, but that's the mentality. So I like this title of this presentation because it helped me learn a little bit more about now who is the majority of our workforce. Something like 60% are millennials and Gen Z now. So how do they think? What's their mentality in terms of staying employed in my company versus leaving? They are not as dedicated as probably we were when I came to work. The bank hired me. I thought, cool, I'll work in the bank my whole life, just like my grandpa. Well, that's not the way they're looking at it. So we need to be prepared and understand how can we keep them happy and engaged and retain them at work. And here's some other reasons why. Powerful inequality in workforce timing. So what's driving this mentality? A lot of it is things like our own client, Uber. And I used to get to this slide, and we had some other slides on Uber. They were constantly on TV. And obviously Uber survived and Uber Eats has helped them. And there's reasons Uber's still alive and they're having to fight their own regulatory battles. But they're also instilling a mindset to consumers. Hey, drive for Uber, get your side hustle on. And by the way, if you drive for Uber, once you take Burke to the airport in the old days and drop him off, you can push a button on your app and get paid immediately for that ride that you just drove Burke. And that technology that makes that happen. And by the way, Mr. Uber driver, the money can go to any bank account, credit union, card, whatever you pick, it will instantly go fund there. And that technology is actually our technology. So Green Dot, our parent corporation, is the company that makes that transaction happen for Uber. So it's cool. And Uber then was on TV all the time, pushing that out. So now you've got workers in your traditional W-2 life getting paid every Friday, every other Friday, or bi-monthly, or however the cycle is, thinking to themselves, well, wait a minute. Why do I have to wait till a week from Friday to get paid when the Uber guy's getting paid 5 times a day by pushing a button? I want that. So their mentality is changing. And we are now seeing technology that are evolving with it. And we obviously at Green Dot are a leader in that because Uber's one of our big clients, Apple Cash, Intuit. All of those people are saying, get paid immediately. And they're using our underlying technology to make that happen. So the workforce is looking at that saying, well, gosh, that's cool. I need that. 44% gig workers have received either full or partial advance payment for their services. So there's another term we got out there. Speak to my age, but gig workers. What do we think of when we hear the word gig? So we have the gig economy now.
It's
For me,
temporary work.
temporary work. Yep. For me, though,
Or
when
on
I
demand.
think of what? No, go.
Or is it or on-demand work?
On-demand work. Okay. What about the word gig itself? What does that make you think of? For me, being my age and being my favorite band, the Eagles, makes me think of the bands in the 70s. Hey, man, I'm going from gig to gig. Where's your next gig? Oh, it's in Portland. Okay, cool. So that term is now applied to work. I go from gig to gig. I'm not going to work at the bank for the next 40 years. I, as a younger worker, millennial, Gen Z, I'm going from gig to gig, man. And that's the economy that we as employers or as employer clients need to accommodate. And there's all kinds of different stories about that. The other term I'll throw out, and I know I'm a little short on time, but I like this one. So you got fintech, you got gig worker. The last one I'll throw out, there was a story that I read, it was now probably a year ago, about a guy that his whole life and his whole income was managed on his phone. So he had an app where he would deliver food and he'd turn that off, and he had an app where he'd walk the dog, he'd turn that off, and he had an Uber, so he'd go drive some guy to the airport. And his whole life was driven by apps on his phone. And the term they came up for him was an opportunist. So there's one you can throw around the office too. So yeah, there's three terms you got to throw around and wow your clients with financial technology terms. So the point though to this one is a big part of the population has received payment on demand, and their mentality is that's what I want more of. So we need to help accommodate that as employers. 75 million freelancers today, almost half the US workforce freelance. Doesn't mean that's their full-time job. Doesn't mean that they don't have a W-2 job as their main source of income. Just means that they're getting their side hustle on to get additional income to go take us back to that very first slide, to deal with their debt, to deal with living to paycheck. They're finding alternative ways to earn money. So here we go. Life doesn't wait for payday. We had some marketing discussion around this, and I know I've got HR people on the phone. Should we have a frowning little girl in our presentation? And we had quite a bit of discussion there. Why is she frowning? We decided yes, because she's frowning for the right reasons. She's frowning because she's been putting money in that piggy bank that doesn't have the rubber stopper on the bottom. It's like an old school one. So she's been putting money into the piggy bank for a particular thing she's saving for. Could be education, could be whatever, house, car, name large expense. She's saving. But what's happened to her is she now has an unexpected emergency or expense that she needs to face, and she has no other way to face it than break the piggy bank. And she's frowning because she doesn't want to do that. And what if we as her employer could offer her a different solution than breaking into that savings that was specified for another purpose? And we can. And that's what things like early wage access will allow these employers to offer. A really cool benefit. Hey, instead of breaking the pig, you can access a portion of your accrued wages in this pay period, a portion, not all of them, and you don't have to break the pig. And one of the pushbacks we used to get when we'd say that, particularly 2 years ago, when I used to say on-demand payment, early wage access, everybody in the room, payroll, HR, didn't matter their background in the office, everybody's arms would cross, heads would start shaking. That's never going to work. It is working. And one of the pushbacks we would get is if I give them access to a portion of their wages in the middle of the pay period, they're going to blow the money. And then when payday comes and their paycheck is that much less, they won't be able to pay their rent and all these other things. That is not the case. And number one, we're not there to parent them. But number two, they're using the funds that they're accessing for legitimate causes. It's not that they're blowing the money in the bar on Friday night and they don't get paid till next Friday. It's that their rent cycle and their pay cycle don't match up. And so they have expenses that aren't necessarily matched to payday. So when they're accessing these funds, they're using them for real everyday needs. And that's, again, back to slide one of who's paycheck to paycheck, who's in debt every day of their lives. So this is talking to, they're using it for emergencies. That's the great majority. Some for rent timing is different maybe, but mostly it's for an unexpected expense that they didn't see coming. And we certainly have had the last 9 months of a million examples of what kind of things can happen to us that we didn't expect. So that's something that, again, as you're discussing this with clients, you're going to get that pushback. Well, if I give them the money, they're going to blow it. Here's some slides and some statistics that say exactly the opposite. And this is great backup to offering these kind of benefits. So let's have a quick example. So Joe has an unplanned expense. Jojo, his son there, drops the phone. He doesn't have access to credit, and he has to wait he's 5 days away from payday. What does he do? He goes to a payday lender. And at this point in the presentation, I always say to people, picture in your brain, certain part of town. You're driving through that part of town. There's a strip mall. It's all neon lights. It's all lit up and beautiful. What's in the strip mall? There's probably a check casher. There's probably a tax preparer. There's probably a pawn shop. And there's probably a payday lender. And they all have beautiful, clean stores that are all lit up. And why is that? Economics 101, because they're making money. If they weren't, they'd be out of business. Because Joe, in this example, is going there for a short-term loan. And again, don't get too married to these numbers, but certainly the payday lender piece is right. He's borrowing $300. He's paying $60 in fees for a 2-week loan. So he's paying 20% on a 2-week loan if he pays it back. If he does what a lot of them do and rolls it, then it becomes those egregious APRs you see with payday lenders. And he doesn't have another option. That's why all those people are still in business. The typical payday loan user does this 10 times a year. That's $600. A guy who's already under financial stress and can least afford to pay that $600, that's the guy who's paying it. We as employers, we as HR, your clients, can give them a better alternative with early wage access. So what if he doesn't wait for payday and he uses something like early wage access and pays a fee of $5? Again, don't get too tied to the $5 fee. There's all kinds of legislation going around right now. We just had some guidance from what's called the CFPB. For those of you who don't know what that is, Consumer Financial Protection Bureau, that came out of the big crisis in 2010 and 11. Now California and New York have put in their own versions. So the guidance on the fees and how the fees are charged and where the funds come from is changing every day. But there will be a fee. This is an opt-in program. And so, yeah, Joe's going to pay his employer, or maybe his employer is going to cover it for him. But what if it's $5 instead of $60? That $55 is a big deal to Joe. Our average cardholder at Rapid Paycard averages something like 400. It was 432. It's in the 430s net pay per week. $15 is a big deal. That's a tank of gas to that guy to get to work. So we can save him for $55 in this case. That's a couple gas tanks of gas, maybe in a 6-pack of beer on Friday night. It's a big change to his life and something that we can offer as employers, as people working with employers. This is what's coming in technology and is the next fintech that will become the next direct deposit as the years go by. Alternative financial services can make emergency situations even more costly. And that's what I was just talking about with the strip mall. Look at the statistics here. Median fee, cash checks without a bank account, 1.9%. That's people that can least afford it. Median loan fee on a payday loan, 16.5%. Do the APR on that. It's brutal. Money orders. If you're cashing a check and working off cash, you're going to have to buy money orders to mail anything. That costs you money. Wiring money. You got employees that maybe have family in other countries. They're using wire services. Paycard solves that too. Believe it or not, just get a second Paycard for your family member. Mail it to wherever they are. My kids. Hey, Dad, I need money. I don't even bother asking them why anymore. But what do? They have Zelle, they have Venmo, but they also have a Rapid Paycard for free. And I just go on my Paycard app. I go, great, send. And it immediately goes on their Paycard. They get a text message as soon as it hits their Paycard account. And now they've got money on a secure Visa debit card. Instant, no cost. Such a huge advantage. And again, if I'm a consultant to businesses helping them look for ways to save money, that's a no-brainer. So really cool stats there. Everyone wants faster ways to get paid. 100%. So back to our generational folks, my children, they're in the Gen Z. 100% under the age of 30, you're going to opt in. Doesn't mean they're going to use the service. And the frequency, by the way, for your clients, you'll get this question too, is, well, how often? Uber offers it 5 times a day. I can't do that. It's up to the client. Maybe they want to go, say, the example of Walmart, who's already offering this today. Walmart will let their employees have an early wage access 8 times a year. Why 8 times a year? I don't know, because Walmart decided. So your employers, they're going to get to decide. They're going to set these policies for their company based on their needs. So 25%, that's today. As there's more adoption of this product, the numbers will become more true because we'll have more data. But that's where we are today in terms of adoption and percentage usage. So number 3, I know I've got consultants, so you might have a mix, but I'd be curious, do you have any clients today that you're aware of that are offering early wage access to their employees? Help me with the chat, Jen.
Will do. 1 no. Nope.
Yeah, and I wouldn't expect you to. This is new technology. The idea of our talk today is empower you to discuss these things internally or with your clients because they're coming. Hopefully like the next slide. There it is. On-demand is a solution for retention engagement. We touched on this. What are some of the benefits you as employers or your employer clients are going to see? Increased job applications, improved employee retention, and lower absenteeism. And I really think that last one's the big one. And Joe, where he drops his phone, if he's got to go get a new phone, he's not at work. And what does that do? That impacts everybody at your client side, impacts all the coworkers. That's the big expense. So something like this where, hey, I'm already under stress financially. I had this unplanned emergency. Oh my gosh, I can access a portion of my accrued wages and solve the problem and still get to work and still get paid for today. Huge, huge benefit. I got 6 more. Empower employees to get paid how and when they like. We talked about this is a cool thing that's a benefit for them. Cool, boss. I can get paid when I need to get paid for whatever reason. 100% electronic payments. Talked about this. If I can't mandate to my employees they get paid direct deposit, what if I can offer them a really cool benefit that will incent them to get on direct deposit? Early wage access is the answer. Drive employee agreement, early wage access I mentioned, or other disbursements as your company or your clients may be wanting to send funds to their employees. This is a great way, no cost. So how does it work? We touched on this. Data is how this works. We need not, and Jennifer and I don't send time and attendance systems and we don't sell payroll systems. What we do is integrate with those systems to get their time and payroll data, and then trade data back using the policies that the client sets. I don't tell them how often the employee can access a portion of their wages. I don't tell them what percentage of their wages they can access. I don't tell them who has to pay the fee. Our clients all decide that. Those are all policies that they set and that we use data to interpret so that we can share it back and forth with their systems through our technology so that it works without them having to do an out-of-cycle payroll run. It works seamlessly. That's the cool thing. Employee wages are accrued instantly. How does the employee look at it? He's looking at a mobile app. Hey, I need money. Oh yeah, I got that thing from my employer. Let me look at it. Boom. Okay, I've accrued. Oh geez, I've accrued $400. I get paid every other Friday, and I get paid $10 an hour. I accrued $400 in this first week. Wow, I can access 200 and solve my problem without going to a payday lender. Cool. I'm going to do that. It immediately funds to him. And the most important thing, and I think I got a slide coming up, is then we are sending data back to their employer so it's reporting on a stub. Hey, remember that early access, that wage access you took last week? Oh yeah, there it is right on my stub. So those are all things that the client drives. That's the most important part of this slide, is those are decisions made by the client. We're just tailoring the technology to their needs. Elected benefit, this goes a little bit to the fee. And again, the technology on this and the regulatory environment on this is changing every day. We just had an update from our division head the other day on the CFPB guide, the most recent CFPB guidance. We're interpreting it, and we are proactively working with the government, the IRS, the CFPB, everybody else, name a government financial acronym. We're working with them to make this right, which is part of the benefit of being a big public company like we are and working with big clients like Apple and Uber and those types of people. So it's an elected benefit. The employee's opting in. There's some compliance language around that. So what are some of our FAQs? Would the employer be charged for the advance or the employee? Up to the client. Some pick one way, some say we want to pay the first one. It's up to them. How the fee is assessed today, is it just it's a straight pass through? How it will be in the future as this regulatory environment changes, I don't know yet. We're learning. And the guidance that we're receiving is giving us more direction. Does the company want the option to select which employees? Sure. It may be certain employees can access a certain percentage and others can access a different one. Maybe you have employees that have far more garnishments than others. So maybe the amount they can access is only 10%, whereas others it might be 30 or 40%. Up to you, up to your clients. Does the company want the option to select how much? Yes, we want that. How does on-demand pay for account for employee garnishments? I just mentioned. The calculation made at the employer-client level is accruing for that so that you don't get caught after payday stuck in a negative. Make sure that that will never happen. And even if it is 10% that the employee can get, that might be all it takes to save him from going to another much more expensive alternative. Other additional considerations, responsibility falls to the employer. So this is one of the key things that came from the guidance recently, is this does come through the employer. If, and the guidance literally a week ago said, if I'm going to go contract with a third party and they're going to make advances directly to my employees without going through the employer and the payroll system, they are going to deem that a loan. And that is not going to get the exceptions that our product is going to get. It's going to be a consumer loan. It's going to fall as a payday loan. And the regulatory world on that is harsh. So you really want to look, or as your clients are looking at these types of people, hey, who is the contract with? It needs to be with the employer. Because if it's with the employee, then it's a consumer loan. Where are the funds coming from? There are competitors out there that are advancing funds to the employer for the employees. We do not do that. We may do that in the future, but we don't do that today. And the regulatory environment needs to change, because if the vendor is advancing the funds, essentially I'm giving now that employer a loan. I'm an old banker. Did you get what considerations did you make before I gave you that loan? And by the way, where does the third party vendor getting the money? What if they don't pay? What if they don't deliver? How does that impact my employee? All kinds of questions there, and all kinds of issues that can come up with a vendor advanced funding. In my Uber example, millions of transactions, billions of dollars, that's all money that Uber gives us. It's Uber's money. We're just making the movement of the funds happen. We are not advancing Uber millions of dollars a day. Offering pay choice with multiple ways. This is always going to be a factor. If I'm offering this to my employee, I cannot tell them you must put it on a rapid pay card or you must put it on an XYZ card. They need to have choice. And you guys know that in HR. Choice is always a key consideration. And then again, are they advances on the pay stub? We had a competitor, I don't think they're around anymore, but they kind of rushed into this thing that were advancing funds to the employees and not putting it on the stub. As you know, that's disaster for payroll and for HR, because the first people they're going to call are you. Wait a minute, I got shorted on my pay. Oh, you took that advance. Oh yeah, I forgot about that, and it's not on my pay stub. So you got to consider that. Obviously, your employees need to consider that. Any questions? Comments? Was that helpful?
Thank you, Burke. There aren't many chats happening, but
well, we had a small but fun group today.
Yeah.
So with that, then I'll turn it back over to Renette. Is that correct?
I'll just see if anyone's unmuting here.
I don't see Renette in the.
She's there. Everyone's muted. So if there's no chats and no questions, thank you for helping facilitate this, Aaron and Renette, and we appreciate sharing the details with you. We're around for any follow-up questions, or more so as you start the talking next year. consulting and gaining some clientele, definitely know that we're a resource.
And we'd love to come back, hopefully, fingers crossed, in person next year, join your chapter live and meet you all in person. Yeah, otherwise, if there's no questions, I don't know if anybody else, Aaron, Arnett, do you have any closing comments you want to share?
I just want to say thank you very much, both to you guys for presenting this. It is something that I think, you know, especially with the way the world is right now, that we'll see more trends towards this. And I'm always curious because I work in the federal contracting world, you know, the stickler of that element as well. But thank you very much. And certainly, Burke, I don't know if you have a presentation that you want to share. We can share that
Sure.
with attendees. I will share this recording, and I'm going to share my screen very quickly because I do have the certification credit information. So I'll pop that up for everybody. And let me know if you cannot see that. But everything is on there for people. But again, this will be in the recording as well. And we'll send this out after our meeting too, so that you can get those codes and put that in for your certification for SHRM or for HRCI. And with that said, I don't know if Renette has anything to say, but I just want to thank everybody for being here. I know it's the last meeting that we have for the year, and we've got holidays just next week to also add on to our COVID plate and everything else. But thank you all for being here. I hope you guys all have a very happy holidays. Thank you always for supporting our local chapter of SHRM. You know, I just can't thank you enough for attending these sessions, but also just being an active member to our local chapter here. It does mean a lot. I know Amber jumped on as well, and she's another one of our board members here at CBSHRM as well. So with that said, I don't know if anybody else has anything else to say, but I just want to say thank you and happy holidays, everyone.
Happy holidays.
Thank you.
Bye.
Merry Christmas.
Bye.
Merry Christmas.
Bye. Thank you again.
Thank you.